Here's 10 things you should know before you sell your Hawaiian vacation rental. I'm Eileen Lacerte with Better Homes and Gardens, Real Estate, Island Lifestyle. Here's the 10. I have a checklist, and I'm going to put the link to this checklist down below in the remarks. But let's get started. When I go out to meet someone about listing their vacation rental here in Hawaii, my first question is this. Are you buying a replacement vacation rental? Are you moving up? Which is very common. They start with a little condo and, oh, we can only be here for 2 weeks a year. And then telemarketing, 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 telecommuting. More and more, they get to spend more and more time here. Okay, now they need a bigger place, and they're going to do a 1031 exchange into a bigger unit. That's the easy one. The one that's not as easy is, yeah, no, we're just going to sell it and take the money. We're tired of vacation rentals. Okay, next question in that case. Did you do a 1031 tax exchange into this vacation rental? Oh, yeah, we did. Okay. I'll just tell you a scenario that happened to me this week. I went out, met with the people, said, okay, are you buying another rental? They said, no, we're tired of this rental business now. We're getting older. We don't want to travel over here so much anymore. We just want to sell it and be done with it. Okay, you realize you're going to have some taxes to pay if you just sell it. Yeah, we do. Okay, did you 1031 exchange into this property? Yes, we did. 10 years ago, we sold something else and we 1031'd into this one. Okay, do you know you're going to have taxes on the last property you sold, that you rolled the profit into this one? So you're going to have the taxes on the last property you sold and this property? Did you know that? Okay, you didn't know that? Okay, stay tuned, there's more. Have you discussed selling this property with your CPA or your tax attorney? I would say no, just by the answers you're giving me. But that's something I need to know. If your attorney says it's fine, end of my questions. You know what you're doing. He or she has told you what you're doing. Good, we're good to move on. My next question is, do you have your STVR certificate, and is it current? Okay, what is that? Well, Hawaii has new vacation rental laws now. And in order to have a vacation rental, you have to have this short-term vacation rental certificate. And you have to get that through the county. And it's not a given that you get that certificate. Your home or your vacation rental has to be located in an area where vacation rentals are allowed. And not all places are allowed. If you're operating without it to start with, if you answer my question, no, it's not current, we're in trouble, because you're already in trouble with the county if it's not current. So I'll put a link down below that explains that in more detail. Okay, my next question is, are you a Hawaiian resident? Okay, you're not. Okay, do you know what HARPTA is? You don't? Okay, remember when I said you're going to have taxes on the last place you sold 10 years ago and you rolled into this one and you're going to have taxes on this? Well, the HARPTA tax is something altogether different. And that tax right now is 7.25%. And that's just for Hawaii. Okay? So are you adding this all up? And then my next question is, are you a U.S. citizen? We have so many foreign owners here in Hawaii that own vacation rentals. I would say on the Big Island where I am, it's more Canadians than anything. That might surprise people, but for this island in particular, Canadians are our biggest foreign homeowners, and most of them have vacation rentals. Okay, having said that, you're not a citizen. Do you know what FIRPTA is? FIRPTA. That's another tax for foreigners when they sell and take their profits out of the country. The first one is HARPTA. You make money here on your vacation rental and you take it back to California, you're going to be taxed on it. You're a foreigner and you're taking your money back to Canada, Japan, Australia, you're going to be taxed on it. Still want to sell? Sure you do, because I'm going to work with you on that. How many future bookings do you have? In other words, you're calling me out now. You probably have bookings a year out. I need to know what those are. And do you know what the projected income of those bookings are? I mean, that may have a value of $100,000, $50,000. I need to know that, because I would use that for sales and marketing. For example, here's one condo for sale, here's one next door. That one's not a vacation rental, this one is. This one comes with $60,000 income the first year. Big difference. Next question, are you prepared to refund all the deposits and payments should your buyer not want this property to be a vacation rental? Okay, you have a buyer, comes in and says, great, love the place, I want to buy it, here's my offer. Oh, and by the way, I don't want any rentals. I don't want any renters in this property, it's just for me to come and go as I please. Yikes! You have $100,000 in bookings ahead of you. What are we going to do about it? That is something that we have to plan for. Next question. You have a vacation rental and it's successful. What are your showing plans when the unit is occupied by a vacation renter? In other words, Eileen, sell my unit. And it's December. And we're going into the peak season. January, February, March, April. Book solid every day of the month for the next 3 months. Lots of people are on the island. This is when we sell the most property. We sell more property in these couple of months than we do the rest of the year. How am I going to show that property when you have a tenant in there every week, week after week, and the rentals are back to back? In other words, somebody checks out at 11, cleaning crew comes in, somebody checks back in at 4 o'clock. When am I going to show prospective buyers your unit? And the last question might be, do you have a complete inventory of every item in your vacation rental? How many towels do you have? How many forks do you have? How many sheets do you have? It's endless, but we have to have that inventory for when we sell it, because that's part of the sales contract. And it's usually due, about 7 days after you accept an offer. The bigger, stickiest part of all that is what doesn't go with the unit. Okay, I'm going to tell you a little secret here. Never ask the husband what is staying and what is going. I learned the hard way, the hard way. Husband's the only one on the island. I go out talking about what stays and what goes. The husband says, I don't want any of this crap. No, I don't, no, nothing. We're not shipping any of this home. Okay, you sure? Yeah, okay, good. I list everything with the property. We get into escrow and the wife comes over to pack up their personal items. All of a sudden, none of the artwork goes. Oh, that vase, my mother gave me that vase. Oh, that table, that belonged to my grandmother, that's not staying here. Okay? That's something you seriously, that's an escrow killer right there, I'm telling you. So be prepared for that. Now imagine I'm coming out to list your house, I'm asking you all these questions. You were prepared to say, well, what are you going to list my house for? And I'm going to interview 3 other realtors. And I'm like, you haven't even got there yet, because I'm not done asking you questions. And if your realtor isn't asking you these questions, be afraid. Be very afraid, because this is going to cost you a lot of money. So let me just give you the scenario of the one I went out on, as I started to tell you earlier. So I get in, I start asking the questions. No, they just want to sell. Okay, I determined that they 1031 into this property from 10 years ago. I think they rolled $600,000 into this place from their last 1031. How much are they going to make on this one? let's say it's another $400,000. Okay, there's $1 million taxable right there if they're just going to sell it. Oh, by the way, I don't give tax advice. 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 Only CPAs and tax attorneys give tax advice, but I have to know everything about it so you don't get in trouble. Can you imagine if an agent went out there and met this client and said, oh, great, you want to sell this house? Okay, here's what it's worth, or this condo, here's what it's worth, sign here, and off they went. And the seller's thinking, great, I'm going to sell this property, I might have a few taxes. And then they get into escrow, and all the back taxes from the first sale, the second sale, and their HARPTA to the state of Hawaii, all of a sudden, yeah, no, this escrow is falling out. So here's what we determined in our discussions on this one this week. I said, why don't you want another property? Why don't you want a 1031 into another property? And they said, we're just tired of it. We don't want to do it anymore. We're retired. We don't want to deal with the rental anymore. Okay. You don't have to buy another rental here in Hawaii. You could buy another rental property right where you live in California. But we don't want another rental property. Okay, do you want to pay the taxes? No. Okay. All right. Got any kids? Because the ideal thing is to keep 1031ing this and rolling it till you drop dead and your kids have to deal with it. Okay? So, turns out they do have a daughter. They would like to help her out. She lives in another state altogether. But our final plan was they're going to 1031 into a rental property for her daughter, and her daughter can manage it and take care of it. End of story. They're happy with the plan, and so's their daughter. So there's a lot to think about when before you decide to sell your rental. But there's lots of solutions, but you have to know going in what the issues are. So if you have any questions for me, my email is down below. I have some links down below too about FIRPTA and HARPTA and the rental certificate. FIRPTA and HARPTA I will do another session on because we need to dig into those, the Hawaii tax and the foreign tax when you sell properties, because that's, right now, like I said, Hawaii tax is 7.2%, and get this one, FIRPTA is 15%. And if you're not doing a 1031 tax exchange out of this property, the escrow and the state and the feds will make it mandatory that these funds are held in escrow, and then you have to file a special tax return to get this money back if you have any coming back. And here's the clincher. You think, oh, 7.25 on my profit, that's not much. Or 15% and the 7.25, it's not on the profit. For withholding purposes, it's on the sales price. Okay? Imagine your property is $1, $2, $3, $4 million. Figure what that withholding tax is. So that's why that takes another whole episode. In the future, I will have a session on FIRPTA and HARPTA. But for now, there's links down below that you can research on your own, as well as the rental situation. And if you have any questions, be sure to email me. My email is also down below. And be sure to reference the 10 things that you should know about selling my Hawaiian vacation rental, so I know which information you're looking for. And if you had any value from this session, please like me with the like button. And if you want to be part of my Ohana, which is Hawaiian for family, hit the subscribe button and subscribe to my Ohana. Until next time, aloha from Eileen.